Well, even though the divergence indicator on the dailies here is looking quite overbought just at the moment, we need to note that on the weeklies there is some quite strong type A bullish divergence in play, and that was on this first dip here and even on this attempted second dip to the downside just here. So overbought on the dailies, that's for sure, but very strongly bullish in relation to type A bullish divergence on those weeklies. So we need to keep all this in mind here, but I am liking the patterns that we're looking at here. Now, as we said in our review tonight, there is a potential by definition that we still have a head and shoulders type pattern here. I'm not really liking the depth of that right shoulder though. That's just here. That's come in quite deep, but if that is still in play, we've got a nice pop to the upside here just above that downward sloping neckline that we've got there, and the target there is looking more up towards that 96.5 area. So a reasonably decent move, and what I'd like about that move as well, if we did get it, is that it would push above this 94. Now this is a support area, a major support area stemming back quite a long time, and if we get above here, which would be now more than likely acting as a point of resistance, it would be very shorter term to medium term bullish. But the real push here is going to be whether we get that push higher. That's the first thing, up to that target area, and then if we do get a pullback from there, really what needs to happen for this to be bullish in any shape or form is for some form of consolidation pattern to occur above that 94 area, and that's what we'd be looking for. If we got consolidation post that target being met above 94, I'd be expecting this to continue on high, but we won't know until we see this type of price patterns starting to form. Now the other pattern that we've been looking at here overall has been that double bottom. Now if this isn't a head and shoulders in place here, the potential is that we've got some form of double bottom in place just here. That's the first dip down to that 88.5 area, and that's the second dip down to just above there. So technically speaking, some form of double bottom in play here, or W formation, and that is looking to break higher as well, just above this level here. So all around that 92.30 area, we do have the potential for this to be breaking higher. I wouldn't be surprised though if we did get a continuation of this move up towards that resistance area, that we then get some form of breather right there, and that's going to be a hard area to get through, as I said, and that breather could be in the form of a retest of the breakout. So we may have to sustain something like this within our trade, and then we'd be looking for buyers to come back in and head up towards the target zone, at least initially. So a few things going on here. I'm still very cautious about the Australian dollar. It's obviously been inflicted with a fair bit of bearish pain over the last number of months, so that is still in play. The downtrend overall is still in play, so we just need to see if we can get this shorter term pattern igniting and pushing higher, and then getting above resistance and getting to our target zone, at least initially.